Hello everyone, welcome to the channel of Tradeometry. Today is Thursday, March 5th. We have a big red day today. Actually not so red. It's actually more red in the Dow Jones and small caps. QQQ is only down 0.3%, which isn't that bad. But midday, QQQ was down over 1%. And we saw a pretty strong recovery towards the close. But I wanted to talk about a few things. This is what I posted in the chat last week. I said Koreans are well known for high risk bet leveraging semi could implode if Samsung and SK Hynix start to dump. And look at what just happened in the Korean stock market. Just look at that. I made a post on 27th. So this post is on February 27th. Okay? Look, 27th, which is Friday. Look what just happened. This is on Thursday and Friday right here at the exact top. And then what happened next? Monday, boom, circuit breaker. Tuesday, boom, another circuit breaker. And we have a big bounce on Wednesday, but looks like we could have another circuit breaker today, because if you look at the Korean ETF, which is the EWY, it's down 6% again. So which could be another circuit breaker today. So clearly in the Korean stock market, we are seeing a very violent risk-off event and a lot of margin calls getting triggered. This can further lead to the de-risk in the semiconductor space, because Samsung and SK Hynix are both two of the main players in the memory space. And last week, I also talked about the Micron technology over the weekend. You can go back to look at my previous video. I said exactly why I think the semi is due for a pullback. So this is last week. So over the weekend, I made a video said I think semi is due for a pullback on Tuesday. We fill this gap, exactly a gap fill. I break down a few semiconductor stocks over the weekend, including Nvidia, Micron, and SanDisk, and I think all of them will due for a pullback and fill the gap below for MU. This 375 gap is one of them, and the next gap could be the 346. And for SanDisk, the gap is at 541, and then the next gap would be around 479. Let's call it 480. Nvidia's slightly better. We see relatively strong in this week. We haven't seen the pullback just yet, but I do believe Nvidia will get a gap fill around 172 or even lower. In the last video, I also called out another thing, which is the IGV, which I believe IGV has already formed the bottom here, and that's exactly what it just did this week. Look at 4 back-to-back green candles. While the market is really weak, IGV is going 4 straight, actually 5 straight green candles. IGV made 5 straight green candles over here. Now it's sitting right at the resistance at 87. So here I think 87 is a big resistance for IGV. I don't think it can just break out to all the way to 90. I think it's due for a pullback to retest 80 or even lower, because structurally IGV is still in a major downtrend. In order to form a bottom, it will almost have to come back to test these major support around 80 or even 77, if not lower. So I think right here, IGV is not along anymore. I think it's due for pullback. Also, I've called everything out in my last video. Feel free to go back to look at my previous video I released on Sunday. I think I've made so many comments that turn out exactly what happened this week. And a very interesting observation today is the Dow Jones. So usually Dow Jones does a little better than tech sector when there's a risk of event. Money will flow out of the tech sector and into the defensive sectors like consumer defensive, industrials and utilities and healthcare. And look what happened today. All red. Consumer defensive is red. Industrial all red. Even utilities red. Healthcare is all red. And financial is red. What is going on today? And you see some of the green in the software infrastructure and software application. But which I believe it's temporarily green, and I believe software is also due for a pullback now because they have such an extended rally in the past week. I think in this market right now, it's really nowhere to hide. I remain bearish, even though if you look at S&P 500, it's still within 3% of pullback. But structurally, I see a lot of things that are breaking down. I'm seeing a lot of cracks, I should say. So how do I play this market, right? This market is really, really hard to play. Really, really tough. Let's look at QQQ, for instance. So today we open slightly lower and pull back to fill the gap. Briefly test the yesterday's high around 612 and then go down and bounce slightly up and then come down to fill this previous gap around 602, 603. Even though we do see a little bit of bounce into the close, it feels more like a technical bounce. I haven't been adding back some of the puts just yet. I actually made a few day trades today with QQQ puts. I made a few $1,000s buying the puts. I made a trade in the morning. I entered my first puts around here, and then it went up and then failed and break down. And I closed my puts around 10:30-ish. And then my second trade happened around right here. I entered the puts. It tried to squeeze me out in this big green candle, but it didn't hold. So this red candle basically negated the previous 5-minute green candle and then went all the way down. And the second trade, I closed it somewhere near the bottom right here, which is near the previous low. And of course, it went all the way down to fill the gap, which is also very likely. As a day trade, I'm just keeping it simple. But you see right here, it's again getting back to the level I'm tempting to short. The reason I haven't add back the puts just yet is because tomorrow we have the non-farm payroll, which is a pretty big deal. It could move the market in a meaningful way. So I'm waiting for the number to come out first, and then I will decide what to do next. And regarding the war going on in Iran, I'm still very, very bearish. One reason is that you look at the oil price today, up another 5%. And we see a little bit of a pullback into the close, but still at a very, very elevated level. If we keep seeing price at this level, even just going flat, doesn't need to even go higher, just go flat, this will create tremendous pressure on inflation. I think a few Fed members also talk about this, saying the war going on in the Middle East could put more pressure on inflation. And then you combine what we see in the Dow Jones today. Dow Jones today at one point broken below the Tuesday low. And you see IWM also very, very weak. Even though it hasn't broken below the Tuesday low, but it's very, very close. It's down almost 2%. It was down more than 2%. And a small bounce into the close. And the semiconductor, SMH, it was down over 2%, almost 3%. Had a pretty big rally into the close. I think this is more like a news related because of there was a report from Bloomberg saying that the Trump administration would require all foreign companies to submit applications if they want to order chips from Nvidia or AMD or Broadcom. But I feel like that's kind of like a rumor, and then the rumor was being clarified and then everything bounced back. But I don't think the pullback is done just yet. I think this is just getting started, to be honest. So I'm sharing some of my winning trades for the last few days. So this is from today, March 5th. I had so this is the first trade, $11,000, QQQ 600 puts, and then another $600 puts again, another $10,000, which is a nice day for me. And this is previous. I short the semis with the triple leverage bearish ETF XOXS, 27%. And this is the short QQQ. This is the QQQ puts I entered from previous Monday. This is the one I bought on Monday, and then Tuesday we see that huge gap down, 43%, $52,000. So that was a nice trade. This is March 2nd. Again, SMH puts. This is QQQ puts, another 13%, $11,000. So this is all for this week. So that's all for today. If you're interested in joining my Discord member, please check the link in the description below. And on Sunday, I'll make another video to talk about everything happened this week, and I will be showing my P&L for the week. I'll see you then. Bye.